Good morning. This is an unusual live stream for this channel, maybe, but I guess it's not. There's a popular saying in Hindi which loosely translates into grab the opportunity by the hair of its head, which means to say that whenever you see something happening and you are almost sure that you have full information about this event and you want to capitalize on that, do not procrastinate. Do not think what will happen if it does not go the way you're thinking. Have a perfect risk mitigation strategy. So in this video I'll tell you how I used a rule based entry exit strategy to gain 10% in 3 minutes in the Zomato listing, essentially without investing in the IPO allotment but post the listing, right? So how the story unfolded, let me just start it like a story so that you can understand what was going on in my head. So in the past 1 or 2 weeks, I was checking a lot of YouTube videos and blog posts that Zomato is overvalued. I mean, you should not buy Zomato IPO, and I kind of agreed to their opinion, but I still wanted to understand. Let's see what pans out, whether their analysis has any relevance or not. So just for the sake of curiosity, I kept around 2 3 days back. Yes, I tried to understand when is the listing date. See, because there are 2 3 things. One is when you offer the share to public shareholders, they have to apply for it. So there is a kind of a application window. So that already had taken place. So the people who would be getting the shares of Zomato just post listing at the IPO price, which was 76 rupees, it was already determined. So yesterday on the 23rd of July, it was a listing date. It was not the IPO date but the listing of Zomato shares on the BSE and NSE exchanges. Now, what happened was I understood that let's try to understand whether there's something to be gained out of it or not. Is there some kind of an arbitrage opportunity or not? But to be pretty honest, I was not really interested in gaining anything out of it. I was just curious about it. So there was there was a video by ET Now or CNBC TV. I don't remember. There was a media house which had a video on Zomato listing. So I checked that video out. And in that video, they mentioned that in the private market, Zomato shares are trading at around 95 rupees. And the IPO allotment price is 76 rupees. So you see, there's a good 20 rupees of a gap, 20 21 rupees of a gap. Now, I mean, that is around 30%, right? So that's a good amount of money. So I felt that obviously whenever there is an arbitrage opportunity, you have to have some kind of an equalization. You can think it of in terms of even principles of physics or geography. The idea is when you have a low pressure region, not high, when you have a low pressure region, so air from the high pressure flows to the low pressure. Now in that process there's a rain in the low pressure region. So whenever you see a cloudy atmosphere and things are pretty stagnant, you must be sure that rain is going to happen because air from high pressure will come there, because air flows from high pressure to low pressure. And a lot of things in life, like a ball goes from top to bottom, not the other way around, because of gravity. So there are many things like that. So similarly, I understood that the private market price is around 95 rupees and the IPO price is 76 rupees. So there's a good 20 21 rupees of a gap between these two, and they have to come and meet, right? So when they come and meet, obviously I could have some kind of an arbitrage gains. It could be 5%, it could be 10%, and I was happy with 5%. I was sure that if I can gain 5% out of this, because I was pretty sure that the arbitrage opportunity would be exhausted in 3 4 minutes. I mean, max to max 5 to 10 minutes. So I knew that there's a good amount of chance that I would be gaining around 5 to 6% for sure. Now, I'm using the word sure quite loosely, but the thing over here is I was really pretty sure that, let's say, even if I start losing money, I had a rule that if the share price goes below 2%, which means let's say I enter at some price, let's take that price 100 rupees, and the share drops below 98, I will immediately exit my position. That was my strategy. And the other side of the strategy was, if it exceeds if it exceeds 105, which is a gain of 5%, I would exit it completely. So I was pretty sure in my head that I have to play between 98 to 105 if I buy it at 100 rupees. So essentially what I'm trying to say is, I was pretty sure that whatever price I buy at, I will sell it at greater than 5% and less than 2%. So I can only hold it between 9.98 to 1.05x of the Zomato price which I get at. But there were few other stories which were playing around, because I opened my laptop and I was with my trading window and everything ready, and at around 9 o'clock there's a pre-market essentially happening between 9 to 9:15. So in the Indian markets, before the market opens, there's a pre-market, right, between 9 to 9:15, in which essentially it's not really market has opened, but some kind of a bidding and some kind of a ask and bid spread is there. So you can check to you can understand what is the feel of the market in those 15 minutes. So I was not able to understand how to get that Zomato early move. And as I opened my trading window, I was not even able to check the Zomato shares. So I thought that maybe it's not getting listed now. But the moment I realized that it is going to get listed at 10 a.m., so I again opened my trading window, and then I realized that people are even bidding 133 rupees. So a lot of bids are getting placed for 133 rupees, and there were also pre-open trades at, not I should not say trades, but I should say that pre-open prices of 106, 107. So I realized that let me just think about it in this way. Even if I enter at 120 and exit at 130, I have good amount of gains, around 5 to 6% of gains. So I calculated my gains. Let's enter it around 120 and let's exit it around 130. That was my strategy. And if the loss is of 2%, I will exit completely. So I entered my buy, and the shares were bought at I have noted it down. Shares were bought at 123.65 rupees, and I calculated the 5% of that. So it came roughly around 130 rupees. So I placed a automated sell order. You can place an automated sell order. We call it limit orders, right? So I placed it at 130 rupees, right? So I was willing to place a selling bet at 130 rupees. But what happened was, a share shot up so rapidly that it got executed only at 137.6 rupees. So you see, I gained around 10% in just 3 minutes, because see, the message you get for buying and selling, you get it on your phone. So I got a message that you have bought a share, and in just 3 minutes I got another message that you have sold shares. No, I'm not giving you the exact number of shares because that's not essential over here. But the thing is, in just 3 minutes I gained around 10% of money. And if I would have not sold it, if I would have become greedy that let me just hold it and let's see how much I can gain, then at the end of the day it went down to 124 levels. So you see, there's almost like no gains for me. So if I would have just stayed there till the end of the day, I would have gained nothing. And if I would have entered the IPO, in the IPO allotment date with a price of rupees 76, I would have gained around 80%. But the thing was, at the IPO date, I was not sure, because I did not have a good fundamental analysis system prepared for any IPO. So I really don't invest in IPO. And even IPO listing. This was my first IPO listing, and you can say this is a beginner's luck. But still, I knew that I have not done any analysis for Zomato IPO, so I cannot buy it with so limited information. So that is why I did not invest in the IPO. But yesterday what happened was, the time span was very less, and the information needed was also very less. Requirement of information is dependent on the time frame, right? So I knew that the private market shares and the shares which currently are offered at the IPO, they have to meet. Also, I opened my trading window and saw that the pre-open trades are actually much higher than my expectations, and obviously they have to meet again together. So these factors combined to give me an idea that let's enter this market. And when I entered this market, I was pretty sure that I will exit it within these boundaries. Greater than 5%, I will exit. Less than 2%, I will exit. So in the process, the greed controlled me and gave me around 10% of 10% of returns, which I'm pretty happy about, because this gives me an idea that I can try this strategy in future as well, and it would definitely work in a lot of the cases, because there's a very limited amount of uncertainty in this. Yes, there is an uncertainty, but quite limited, and the downside is also controlled by that 2% of a loss criteria which I have set. So what is the thing which I have learned over here? First, always remember that greed is bad. Let me just repeat it. Greed is bad. And second, rule based investing or trading for anything, for entry exit, is perhaps the best way to invest, because when you have a rule in place, you control the psychology. Because see, in trading or investing, most of the gains or losses can be attributed to your psychological beliefs about money and about investing. So if you can control your psychology, you can control your gains as well. So if you have a kind of a rule which is like not compromising with anything, if you have decided that I will exit when these conditions are met, you exit when these conditions are met, and that's it. You don't have to worry about other factors. You have to be pretty sure about your rules. So these are my lessons which I learned. So yeah, I mean, I just wanted to make this video so that if anybody who is interested in investing and wants to know that what are the key skills, they must know these things: that greed is bad, and have a rule based strategy, and always capitalize on information which you have access to and you have a conviction about. And yes, that goes without saying that there are chances when you can lose a lot of money, because I have been investing for the past 9 years and I have not lost a lot of money, but there was one particular share, I would not name it. I lost a lot of money in that, and I had done a lot of analysis in that as well. That was my first company for which I did a full-fledged fundamental analysis, and I was pretty sure that it was going to quadruple or maybe go 5 times or become multi-bagger pretty soon. And till date, it has given me the most amount of dividend returns as well. But the thing is, I had to exit that stock in 3-4 years. So I have not held those shares in the last 5-6 years. But still, the lesson was, exit a share when you think you have met your financial targets. Don't think of multi-baggers unless you are an expert, because see, I'm really not an expert in finance. All I am is I know things here and there, and what I know, I'm pretty sure about it. But when I try to guess something, definitely there will be a lot of uncertainty. So that's what happened in my fundamental analysis just 9 years back, when I was pretty new to finance, pretty new to investing. I was having a lot of conviction that this is going to happen, this is bound to happen, and that did not happen. So that is the idea, that essentially if you can control your psychology and you can have your own exit and entry strategy, you can get good amount of decent returns in long period of time. And yeah, that is the lesson which I have learned. And yes, I have also made a video in the past about whether investing or trading is akin to gambling, and obviously it's not. People who don't know investing, who don't know trading, they believe in bets, they believe in tips, but you don't have to believe in that. You have to trust the information which you have and have conviction in them, and you have to have few rules, and those rules are pretty scientific in nature. And see, even if you use a linear regression or a time series to predict anything for academic nature as well, it would have an uncertainty, right? You can't be 100% sure. So even trading and investing has its uncertainties, has its probabilistic point of view. So you have to take those things into account. And that's the whole essence of trading investing, and that is why I have made this video, so that you understand that in life, whatever you do, you will have uncertainty. I remember that I was working for a startup 5-6 years back, and the founder CEO said to me that, Ashish, whenever I do 10 things or decide to do 10 things, out of them, I don't believe that all of them will work for me. Maybe 2 or 3 will work for them. And that is enough. If two or three of 10 things work for me, I can live happily. So that is how you have to live in life as well. I mean, try many things, and out of them, 10 to 15% of them will only bear results. Now, see, in the beginning, you may get better performance. Maybe you are trying 5-6 things, and all of them give you good results. But law of averages and kind of like mean reversion will automatically kick in, and on the long period of time, your success rate will be probably close to 15-20% of the decisions which you take. And as a famous going says, that no decision is worse than a bad decision. So with that, I will try to end this and say that greed is bad, and always capitalize on any opportunity you have by the hair of its head.